We're a long way from home, 140 miles off the coast of Louisiana, where American technology has unlocked new resources buried deep beneath the waves below. It's a new industrial revolution, and it's happening right before our eyes. And tonight, you're going to learn all about it. Mad Money, Invest in America, from Chevron's anchor platform in the Gulf of Mexico begins now.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate you. So call me, 1-800-743-CNBC, or tweet me at Jim Cramer. When we think about technology, we imagine artificial intelligence, machine learning, GPUs, the usual shoot match. But maybe, just maybe, we should be thinking about this, a gigantic Chevron floating production unit smack in the middle of the Gulf of Mexico. I know in a day when the Dow declined 141 points, S&P advanced 0.21%, NASDAQ gained 0.76%, it might seem strange to chopper 140 miles offshore to see this brand spanking new monster. But I think it's worth it, because energy is the driving force behind much more than you think that's happening in this stock market. Now, we know that today's belong to Elon Musk. The man told a story last night that he should have told when he had that robo-taxi meeting earlier this month. He talked about how his new electric vehicles were ready to go live, and that Tesla would self-drive and much more profitable than people think. Much more, by the way, certainly more profitable than anyone else in the industry. Oh, it was a tour de force, standing ovation conference call. Tesla deserved that rally because it never should have been down so much in the first place. But then Musk took a shot at the internal combustion engine. He said gasoline-powered cars will soon be a niche business. He invoked a horse with a veiled reference to the buggy. I say, wait a second. Chevron's a big thing company, too. CEO Mike Wirth, our guest tonight, did not spend more than $5 billion in this thing because fossil fuel-powered cars will be a niche business. Elon Musk, well, he talks a better game than just about anyone. And I think Tesla's got tons more room to run. How about that? But he's wrong on this. In the meantime, Chevron stock is hostage to the price of oil and gas and has no control of either commodity. Plus, it costs a fortune to get oil from the bottom of this deep blue sea. By the way, it's like all the way down where Everest is, I mean, in terms of height, you know? And then pipe it to the refinery and then truck it to the gas station, where then they can sell it to you for about $3 a gallon. Same price it's been for a while. But this is not just a grudge match between the old and the new, a battle of electric vehicles versus internal combustion. The truth is, fossil fuels are essential for a lot more than vehicles, like it or not. We're here to explore the intersection between the tech titans, the Metas, NVIDIAs, Microsofts, Oracles, Googles, and their insatiable demand for energy. The data centers they're building are voracious consumers of electricity. They need to run fast, and they run very hot. The grid can't handle it. There isn't enough power. So what happens? We hear that these hyperscalers are going all in on nuclear power. Oh, I love nuclear, even more than most people. But after spending time studying GE Vernova, the company that makes equipment for nuclear plants, and after talking to Chevron's Mike Wirth, I'm beginning to believe that nuclear power won't play much of a real role in the data center future, at least for another decade from now. They're just that hard to build, and even before you build them, it's almost impossible to find a town that's willing to let you put a nuclear plant in your backyard. If we need more energy, we're going to get it from what comes out of the ground in places like this. Fossil fuels that will power the data center, specifically natural gas. When you study GE Vernova's fantastic quarter, and it was, and you read between the lines, the numbers that shine were certainly not nuclear, definitely not wind. No, the strength came from electrification and the power of natural gas. You may be reluctant to invest in it. You might think, who cares? But you need to know how vital all of this fossil fuel technology is to the growth of Magnificent Seven. Because of these data centers, because NVIDIA's chips burn so darn hot, and they use an insane amount of electricity, we simply need more fuel, fossil-based fuel. Oh, and can we just take a moment to understand that there's more to technology than just generative AI and machine learning? Chevron's Mike Wirth and I strolled Anchor, this production unit, that'll be producing 75,000 barrels a day for years or even decades, given that there are more than 400 million barrels of oil beneath my feet. As we wore our hard hats and held on to handrails, I saw much tremendous technology for this electrified facility. Yep, it doesn't run on what he gets from beneath the sea. It's electric. I saw amazing Caterpillar solar turbines, a division once run by the incredibly successful Jim Appleby before he ascended to be the head of Caterpillar, duly noted. I saw a ton of equipment from Emerson. Emerson, wow. I haven't looked at that thing since it launched a hostile takeover for National Instruments. Maybe it's time I revisited it. Same goes for ABB, a Swedish-Swiss giant that makes electrical equipment. I saw their stuff all over the place. All these companies are about creating clean power to run this behemoth and run it safely. This is a different kind of technology. One you could say is more hostage to the economy, like Honeywell or Carrier. Two misunderstood stocks that got pancaked earlier today after reporting some confusing numbers. They were both clobbered, especially Honeywell, which we own for the Travel Trust. It's been red hot on a restructuring, but ice cold on earnings. We're formulating a plan for it. Sent you a memo earlier today, but club members tune in tomorrow. Of course, it's not all tech. We used to be hostage to an organization called OPEC, the Organization of Petroleum Exporting Countries, because we were a giant importer of oil even just 20 years ago. Now we're producing more than 13 million barrels a day, the biggest producer in the world. We're a net exporter. We broke OPEC. Much of the crude sits in the Permian Basin, where Chevron has a huge presence and growing one. That basin, which was supposed to be tapped out for so many times, just keeps coming and coming. However, the wells are indeed short-lived. This will still be pumping. This, what we see here, maybe, I don't know, 20, 30 years from now. The death of OPEC has changed the whole geopolitical map. In 1973, when Israel was attacked by Egypt and Syria, our government backed Israel, and OPEC went ballistic. They held back oil production, so the price soared. Next thing you know, we had stagflation, a horrendous stock market, and a terrible recession. This time, Israel's at war, arguably multiple wars, but there's no stagflation or recession, and we got a rip-snorting bull market. Why? Let's just say you're looking at it. This much maligned industry, this industry that spent billions upon billions of dollars to try to be as low carbon as possible, including this gigantic floating production unit, is the reason why oil prices have actually come down during this period. They've gotten so much production that OPEC is now powerless. Granted, it wasn't always this way. We'll ask Chevron CEO about Macondo. Yes, the disaster that befell the Gulf of Mexico almost 15 years ago. We know that Musk's Tesla still represents the future, and his stock's about to take off, while Chevron stagnates because it's hostage to oil and gas prices. But the bottom line, this Invest in America series that brings us here celebrates American ingenuity, and it's pretty darn hard to find a better example of that than Anchor, the gigantic floating oil platform in the Gulf of Mexico that I'm standing on right now. Let's take questions. Let's go to Robert in New York. Robert.
Jim, I wish I was on that platform right now with you, having some nice porterhouses. I got to tell you that. We had a couple of scotches. It would be fun.
Well, I got to tell you, they have excellent soft serve here, too. I got to point out besides the steaks. What's happening?
Anyway, Jim, this next stock is up over 20% this year, and their Q2 2024 revenue exceeded expectations because their digital sales and new product instructions contributed significantly to revenue with a strong e-commerce performance. Not to mention their pending merger of Albertson. This CEO, Rodney McMillan, is firing on all cylinders with his management. I feel this company's undervalued. Kroger.
Robert, you are right. With Albertson, I think it's better because they got to go up against Costco and Walmart and Amazon. Without it, they still do well. But frankly, look, this administration, I think they'll hold this deal up from now until, I don't know, this thing's tapped out. How about that? Let's go to John in New Jersey. John.
Hey, Jim. How you doing today?
Not bad. I got some nice sun here. How about you?
Doing good. My question is about GXO. With the talk about maybe takeover, I've had the stock since 2021 when it spun off from XPO, and I know it's been at the highs lately. Should I trim, hold, or sell out of GXO?
I think you should hold it. Look, it's a really good company. It would be really icing on the cake if you do get a takeover, but GXO's been a winner. I'm not leaving that stock. I'm staying with it. Look, we are out here to celebrate American ingenuity. And it's hard to find a better example than the oil platform I am standing on right now at this moment. Oh, man, tonight, What's a visit to a Chevron oil platform without a sit-down with CEO Mike Wirth? Don't miss my two-part exclusive from Anchor with the man himself. Then, this is a tricky time for the oil services stocks, so I'm running through the big names, maybe sharing where I come down. Oh, and Elon Musk, oh yeah, stock going up. He made it clear last night on his conference call that he's laser-focused on an electric future. So is there some room still for old-school oil and gas? I'm sharing what I'm learning out here in the Gulf, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.